Good morning. It's February the 6th, 2017, Monday, and I'm currently away on holiday at the moment, taking a short break. So, apologies if the sound is strange and if I can't get a video uploaded on a regular basis this week. But I thought if I wake up naturally, then I will have a look at the charts and take a trade. And hey presto, 6:15. Turned over, woke up, opened the charts, and saw this alert to the long side here. So apologies if there's a few lines and what's not on the charts, but that's because I'd attempted to make a previous video and got disturbed. So as you know, first thing I want to see is an alert of some sort. Now, you may think this is all sort of very arbitrary and random, and how do you pick these alerts? But you must remember that alert is a break of some sort of support to the downside. In other words, you've got a trend here: low, high, high, low, high, high. It's broken the upper trend: low, high, high, low, high, high. So it's a break of trend. As such, you can clearly see when this alert happened, you've got a swing trend in place as well as the candlestick trend. So the swing is the high, the low, the high, the higher low here, and the higher high on the alert candle. And then the candlestick trend is these two green candles here: low, high, higher, low, higher, high. So that's all you have to remember. It takes some getting your head round, because the traditional method of identifying a trend is always the swings: the high, the low, the lower high, the lower low, the break of some sort of support. People will tell you this is the support, but this is the truer support, if you like, because this is part of a downtrend. So this isn't a strong support because it's part of the downtrend. This is stronger support, and I'm talking about this low, high, high, low, high, high. And again, if we go to the line chart, you can see that trend: low, high, high, low, high, high. It is something you will learn over time. It will become second nature, as it has with me. That's not to say I don't make mistakes. That's always going to be the case. But and we can clearly see on the line chart again the trend here: low, high, higher, low, and ultimately it had made a higher high here and a higher low here, which we can see if you look at the candles. But again, you don't need to be an expert at these swings. It's the candles that you're looking at, and you're just looking at the 5 minute trend based on these three 30-minute candles, or two 30-minute candles here. So if you drop down, excuse me, then you will see between those two green lines, which if you go back up again, those two green vertical lines, that there is in fact a trend there: high, low, high, high, low, high, 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 low, high, high. Line chart again, there's a little trend there. So you've got a 30-minute alert, you've got your little trend in place, you wait for a pullback. Well, in this case, I didn't wake up until gone 6, so there's our 6 a.m. Vertical line. So the only way I could go, remember I draw that line to show me the swing trend, the only way I could consider going was long. Otherwise I'd have a long wait in order to break this trend line here with another trend, or a 30-minute alert if you like. So you've got to come down, break through that trend line, which would then probably constitute a 30-minute reversal to the downside, possibly pull up to that trend line again, and then consider going down. So you can imagine I'm going to be sat around for eons, ages, waiting for that to happen. So the move of the morning, or the move of the pre-8 a.m. London Open, if you like, is long. And as you can see, the price is pushing up. I hit the trade as a result of this 5-minute alert, and then put my take profit well below this level here, the 75 level, 112.75, in order to just grab 11 pips. So as you know, on Thursday I got caught out by going for 14 pips and missed it by about 2 or 3 pips. Friday I didn't trade because I was preparing for the holiday. Well, I did take a little scalp trade, but that was something entirely out of this particular method. But again, that comes with experience. So that's the trade of the day. So hopefully that is clear to you. 30-minute reversal, which is a 5-minute trend. There was an H1 reversal as well, but I preferred to build my assessment, if you like, on the 30-minute. This time of the morning, you need to drop down to the slightly lower time frames in order to move quite quickly. So just to show you, if you look at that low on that candle there now, 30-minute candle, this is where I would expect the trend to reverse. You've got your low, your higher low, your higher high, which is formed in this current candle, for which you would then need to pull down, make a new 30-minute candle, which would break that green line there, and that would be the start of your new 5-minute trend effectively. So but remember, you're in an H1 reversal to the long side, so in fact I would really want to see the H1 cancelled out by an H1 to the downside, which would be the low of that candle there, talking about this green candle there. So again, you'd want to break through and then potentially close through or have an alert to the downside, and then you consider thinking about shorts. But that's out of my timing, out of my, I don't want to be hanging around charts and waiting for this to happen. I want to be out as I am now and free to do whatever I want all day. So that's the whole ethos of my trading plan. Get in and out before the London boys get to work. It's now 7:35 in the morning. My trade was taken just prior to 7 o'clock, which was the European Open, and as you can see, it does what it says. Thank you for watching. Have a good day.